Today's webcast is brought to you by First International Title. The New York Fed president says a rate hike in September is less compelling after a turbulent week in the stock market, and increases in employment and current mortgages have driven the housing market to its strongest point since 2008. Ahead on Thursday's News Wrap. While many experts have expressed doubt as to whether the Fed will raise rates in September following Monday's Dow Jones crash, a rate hike seems even less likely after an influential policymaker from the Federal Reserve Bank of New York weighed in on the issue. Wednesday morning, New York Fed President William C. Dudley expressed the idea that the rate hike in September's Federal Open Market Committee meeting seemed, quote, less compelling, close quote, than it was a few weeks ago following the turbulent stock market activity earlier in the week. Dudley's remarks on Wednesday were the first public indication that recent events are influencing the Fed's plans for the September meeting. His comments on Wednesday make it seem less likely that the Fed will raise rates in September, since many investors are betting heavily against the rate hike, and Dudley has previously stated he does not want the Fed to surprise markets. The next FOMC meeting will be September 16th and 17th. Multiple market indicators show solid, strong stabilization within housing in June, mostly due to employment and current mortgages, according to Freddie Mac's multi-indicator market index released Wednesday. Housing markets are the strongest they have been since 2008, with national index surpassing 80 in June. Both the current mortgages and employment indicators increased from May to June, up 82.7 and 101.7. You can check out these stories and the latest happenings in the industry right here on our site. Thanks for joining us. We'll see you again on Friday. Until then, stay with DSNews.com for all of your most relevant default servicing news.